For some reaction to the rise in rates, we can go to Rob Henderson. He's markets chief economist at National Australia Bank. So, Rob, it was a tough call today on the RBA, but did they make the right decision here?
Oh, look, I think they did make the right decision here, Lindsay. That's certainly our view. Is in October, the cards are all pretty well laid out for an increase in interest rates. So it's still a bit of a mystery why they didn't go in October, but basically the justification they've used for an increase in interest rates at this November board meeting could have been used in October. So in any case, I think they've made a very strong case for an increase in interest rates in today's statement.
Are they now ahead of the curve?
Look, I'd say they think they're ahead of the curve at the moment. In fact, there are hints in the statement that they believe they are ahead of the curve. They've said that in order to forestall what they expect to be an increase in inflation down the track, they think the risks in the global economy have abated. And they also use quite strong language suggesting that because the risks of an excessive downturn in China has lessened, that means that Australia is likely to have a terms of trade shock. Their words, which will boost domestic income and investment down the track and threaten their inflation outlook. So I think they now would believe they're pretty much in line with the curve, if not a bit in front of it. And that probably means they can afford to wait now until next year before they need to consider any further increases in interest rates.
Next year is when we're going to get the next rate hike. Okay, what do you think they were really watching as they made this decision? I mean, some have said the labour market was top forefront of their minds here.
Oh, look, I think that's a misread of the situation. In fact, one of the things that we remarked about after the October statement was that there was no mention whatsoever of the labour market. This time there's a whole paragraph on it. So I think what happened last time was that they deleted a whole paragraph out of the draft statement justifying a rate hike in October, and this time they put it back. So look, I do believe that they think the international situation is improving. The risks are getting less. As I said, they're less worried about China, they're less worried about market volatility, and I guess being less worried about China means more focus on the coming terms of trade shock and the mining boom, the investment in mining, which is going to go ahead in Australia, which will drive the economy higher and push inflation back to 3% or higher over the next couple of years.
Rob, very quickly, how important is it for the Australian economy to reduce its dependence on the mining sector, as Julia Gillard says?
Oh, look, I don't think that's important at all. I think at the moment the outlook for China is extremely rosy. We believe there's at least 10 years ahead in the development and urbanisation of China. That's a massive amount of coal and iron ore and base metals that China will need. So I'm all in favour of Australia taking advantage of the wonderful opportunities that are ahead here.
Rob Henderson, Chief Economist for Markets at National Australia Bank, we thank you very much for joining us.